have successfully organized a series of webinars since the beginning of the year, covering markets like Russia, West Africa, Central Asia, and Eastern Europe. Today's webinar, which is also streamed via MPOC's FB Live, it is the fourth in our webinar series and will focus on the Middle Eastern markets. Our discussion is centered on the trends and potential for Malaysian palm oil. Some of you may already know the region is a leading importer of food items, including vegetable oils, but due to the lack of domestic oilseed supply, it is dependent on imports. And last year, it imported over 6 million tons of oils and fats, of which 41% comprised of palm oil. We will be focusing on three markets: Turkey, Saudi Arabia, and UAE. They were the three largest importers of palm oil in the region in last year. Malaysia exported 2.5 million metric tons of palm oil and palm oil products to the region. So in terms of marketing and promotion, we will need to ask the question, what more should we be doing to increase the usage of palm oil, or what are the new sectors we should be focusing in future? Interestingly, from the figures we saw, there was some volume of imports comprising of certified RBD palm oil and palm olein. Again, would there be a long-term trend or a growing demand for certified sustainable palm oil in future here? Should more emphasis be placed on promoting Malaysian palm oil as MSPO or even RSPO certified? So let's hope our speakers may be able to throw some light on this. And in terms of the consumer market, in view of the pandemic we are facing, as we know, there are expectations for health and wellness in the region. For example, in Saudi Arabia, they are raising concerns on trans fat. So how can we have a greater push or make a greater push to promote palm oil as a trans fat-free solution in the food manufacturing and the HORECA sector? Again, we should be aware that post-pandemic, although we see a surging demand for goods, the cost of shipping has increased tremendously. For example, according to The Economist itself, the average cost of shipping a standard large container, a 40-foot container, has surpassed $10,000, some 4 times higher than a year ago. So what can we do to ensure trade is not disrupted and there is a ready supply of palm oil products in these markets? With that, ladies and gentlemen, I would like to warmly welcome all our speakers. And I will not do an introduction here. I will only do that later as we come to the speakers. But let me invite the first speaker today. It's Mr. Faisal Iqbal. He's the Director of Marketing and Market Development at MPOC, and he will be giving an overview of the Middle East market. Faisal?
Thank you, Ms. Balwinder. Good afternoon and good morning to all our participants from wherever you are joined today. So let me start sharing my screen. All right, so in my presentation today, I'm just going to briefly touch on the Malaysian palm oil update in the Middle Eastern market. So my presentation would focus on the oils and fat scenario of the entire region and their oils and fat supply mix, what role is palm oil playing in the industry or in the overall region, specifically discussing a little bit on Malaysian palm oil and its market shares. And in the end, I'll just give a quick short-term and medium-term outlook for the region that we have. I'm not going to speak specifically on any market because our fellow panelists have had prepared very interesting presentations, and they are the ones who will be going in details about the dynamics of each individual market. So just to start with, the Middle Eastern region for us comprises of these 14 markets. Some of the key factors which we take into account when we look at any region or market is the overall population, 330 million plus in case of these 14 countries, makes it a large consumer base with very similar consumption pattern, eating habits, makes it a very interesting market for us. Self-sufficiency, which determines their capability of growing their own oilseeds. And you can see beside Turkey, the entire region has practically 0% of oils and fats contribution from their own market, from the locally produced edible oil. So this indicates that this entire region is net importer of oils and fats, heavily reliant on imports, and of course makes it an ideal destination for any exporting countries of a commodity like oils and fats and oil seeds in case of Malaysia and other countries. The third parameter that we're looking here is the per capita consumption. So besides Yemen, you all will notice that the entire region has a very good per capita consumption. The average per capita consumption is about 25, if we just combine the 10, 11, 12 that we have, which is very close to the WHO recommended per capita consumption figure of about 29, 30 kg. So this also determines, for us to see what is the potential for growth in the region, how much is there room to expand the per capita consumption. So with a population of 330 million, imagine even 1 kg increase in the per capita consumption average translates into a large quantity of oils and fats. So in this slide, let's take a look at the oils and fats mix S&D available in the local market. So the consumption of the entire region is about 8 million tons. And the local production is about 3.7 million tons. And if you can see from the trend of the last 5 years that every year between 6 to 6.5 million tons of oils and fats is to be added through import. Now, you must be wondering that, how come this local production is 3.7 million tons when we just saw that the self-sufficiency of almost all the countries was almost nil. So basically, the figures that we have derived from the database of Oil World, they include local production, the oil which is produced from crushing of the oil seed, both local and imported, is considered local production. So there's a large quantity of soybean and sun seed which is crushed, imported from overseas and crushed locally in the region for meals and oil seeds, meal purposes for animal feed and others. So that's the one which contributes this oil. So consistent market, 6.5 million tons of requirement every year, and consistently growing both supply and demand. And if we look at the major markets, you'll see Turkey, Iran, Saudi Arabia, Iraq, and UAE. These 5 countries alone contribute about 86% of the total consumption because of, these are the largest populous countries and also have well-established oils and fats and food industries. Now let's take a quick look at the consumption pattern of the region, which oils are preferred, and a quick comparison from 2010 to 2020. So if you look at 2010 first, you'll see that palm oil was the largest consumed edible oil in the region with the share of 33%, followed by sunflower oil, then soybean, olive, butterfat, and other oils. So fast forward 10 years, we see that sunflower is now the largest consumed cooking oil with a share of almost, or 38%, which is almost double as compared to 10 years ago. Palm oil is the second largest consumed edible oil with a share of 29%. So this increase in the significant increase in the share of and consumption of sunflower on the expense of other soft oils like soybean, olive, rapeseed, they've all gone down, is primarily because sunflower is the preferred cooking medium for household in the entire region. Turkey is a big producer of sunflower oil and a big consumer of sunflower oil. And also over the 10 years with the increase in population, per capita consumption, this has all contributed to the increase in the popularity of sunflower oil and also consumption in the household sector. Palm oil, on the other hand, is mainly used in food sector and food processing sector. And with the increase in tourism and inclination towards more fast food, snack food, hopefully post-COVID, these things will go back to normal. We foresee that this consumption of palm oil will also grow further. Now we looked at the total import of like 6 million tons. So I want to break it down to what oils make that 6 million tons, 6.5 million tons. So this is the 5-year analysis and the oils which have been imported in the Middle Eastern region. Palm oil has been the largest imported edible oil every year for the last many years. The average import is about between 2.7, 2.8 million ton. There was a decline in 2020 because of COVID-related restrictions and reduction in demand from the food sector. But then we'll discuss in the following part of the presentation that sunflower, of course, when demand shifted from HORECA to home consumption, there was more requirement for soft oils, and sunflower was the one who benefited from that. But these are the oil mix. So you can see that soybean, corn, and other oils have gone down consistently. So the two dominant oils is palm oil and sunflower oil. Although soybean, the import have gone down, but the contribution is being made through the oil which is coming from the crushing of the seed. So this is just import. That oil is not being reflected here. So now, again, taking it further down, taking a deep dive into just palm oil. Out of all, we've taken a look at the overall oil and fats and the overall imports. Now let's look at palm oil and the shares and the outlook that we have. So the overall import of palm oil in the region in 2020 was 2.534 million tons. And there was a decline of approximately 300,000 tons in imports from 2019 because, like we discussed earlier, that there was lack in the demand from food and HORECA sector because of the COVID-related restrictions. Most of the region was either observing full lockdown or partial lockdowns for almost a year. And our mainstay is food and HORECA, B2B, and that was severely affected. But we foresee that the trend is reversing in 2021. We are we're actually seeing that demand is coming back. And now finally we come to the last part, which is Malaysian palm oil and its products. So when we see Middle Eastern region is also becoming a very attractive market for specialty fats. And we foresee this will be the one region where there would be growth and potential expansion. So these numbers are the collective exports from Malaysia of palm oil and finished products, which consist of palm kernel oil, oleochemicals, and other specialty fats. So the imports in the last 5 years have increased by almost 20%, from 2.07 million to the height we saw of 2.75 million in 2018 and about 2.486 million in 2020. So there are several factors which have contributed to the decline actually from 2018, 19 and 20. One of the obvious one was the overall decline in the imports of palm oil. But again, we have other competing oils. We have our competition from other suppliers, our neighbors, Indonesia. Plus then there is competition from other competing oils, the price premiums and all. But overall, we foresee that, Middle Eastern market is a very reliable and consistent export destination for Malaysia and Malaysian palm oil products. And these are, a quick analysis of how we have done in the first 8 months of 2021. So Middle Eastern region actually is one of the very few markets which have actually registered a growth in 2021, both in terms of volume and value, of course. So we have seen a 4% growth in the exports if we are comparing the entire, both Malaysian palm oil and palm oil products. And some of the markets which have stood out, like for instance, Iran has registered significant and impressive increase in the first 8 months. UAE has registered an increase. Similarly, some markets have gone down, like Turkey and Saudi Arabia, for the factors which we just discussed in the previous part. But overall, we foresee that by the end of 2021, we would continue to see positive growth. And why? Because some of these factors is a short and medium-term outlook that we have for the region. With the population base of 30 million, consumption of 8 million and more, this region is going to be a very attractive destination. Can't say enough about that. So in 2020, like we just discussed, demand shifted from business to business, which was a business to HORECA food sector, and it shifted towards business to consumers. More soft oil was being used, more cooking was done at home. However, we have seen in the last 6 months or 3 months, countries, especially like Turkey and UAE, life is getting back to normal faster than any other countries around in the region. And the demand shift is likely to happen again. Now we foresee that more demand will shift from B2C to B2B. Also, like I just said, the Middle Eastern region has shown consistent growth in the consumption of specialty fats, and due to palm oil's nutritional qualities and functional attributes, we are very confident that palm oil will benefit from this trend. Jan to August export figures have registered an increase, but we foresee that by end of the year, we'll see approximate 10% increase in the export of Malaysian palm oil to this region. And another, there's a lot of festivities coming up in this region. The World Expo is about to start next month for 6 months. FIFA 2022 in Qatar would be a great attraction. Hopefully full resumption of Hajj and Umrah pilgrims. These are some of the factors which will provide, which we feel provide positive short-term outlook for the Middle Eastern region, and we hope that we all can capitalize on these factors, and we remain very positive for this. So with this, I end my presentation and pass it back to the moderator. Thank you very much.
Thank you, Faisal. Yes, as I mentioned from the beginning, the Middle East market does show a promising growth potential, and the Malaysian Palm Oil Council will be focusing and putting more efforts to increase our market share here. Dubai Expo, yes, for the information of participants that are listening in, we will be participating at the Expo Dubai, which is going to attract a large number of consumers and traders. Malaysia is having its own pavilion, and we from MPOC will be organizing a number of trade events to promote Malaysian palm oil. So those of you that will be there at the World Expo, do look out for the Malaysian pavilion. And yes, as usual, the World Cup, that's the largest soccer tournament. I'm sure we have fans here too. Very widely watched sporting event in the world. It's going to attract a large number of people. So globally, the food consumption, the habits of people binging when watching sports event is great. So it will increase the demand for the HORECA sector just in the Middle East region itself. I'm confident of that. With that, let me now introduce our second speaker. She's Ms. Ebru Agdek, General Coordinator of the Turkish Culinary Products and Margarine Industrialists Association. She has 15 years of experience in the food sector and has been dealing with issues related to corporate communications, technical development, regulation, and policy making. Ebru will speak on the use of palm oil in Turkey, the opportunities the market holds, and some of the constraints and also challenges it faces. Ebru, the floor is yours. Thank you.
Thank you. Thanks a lot for the kind introduction. Can you see my screen? I don't hear you. Can you see my screen?
No, we can't. Not at the moment.
Okay, I'll try that.
Okay, yes.
Okay, great. First of all, I'd like to thank MPOC for the kind invitation. It's a great pleasure to be among these speakers today. And I'm sorry that I couldn't use the virtual backgrounds. My MacBook Air didn't let me. Therefore, I just used the colors on my clothing. At least I can do that. So going back to the presentation, today I will talk about the Turkish market updates and outlook. But before I begin, I will introduce you our association. We have been founded in 2004. And as the name says, we cover not only margarine industry, but also other categories like herbal and fruit teas, dry soups and frozen foods. And we have members of, our members are the largest producers of those categories in the whole world. Looking at the Turkish vegetable oil industry, oilseeds production has reached to 2.6 million tons in 2020, and majority comes from the sunseed flour, and second one is the cotton, 9% is the others. Again, vegetable oil production, this is excluding olive oil, which is about 200,000 tons, has reached about 825,000 tons. And the main comes from sunflower, it's almost 70% of the whole production. The second one is the cotton with 19%. It's followed by corn, and the rest is other 7%. When we look at the vegetable oil consumption, again, the main constitutes from sunflower. Almost half of the consumption comes from sunflower. This is followed by margarine with 27%. Then comes the cotton with 8% share, and corn is followed by the others. In total, it's about 745,000 tons of vegetable oil consumptions. And again, it's excluding olive oil, which is a small quantity. And if we want to make a comparison between the needs and the requirements, when we look at the crude oil, we can see from the previous slide also, domestic market need is about 1,745,000 tons, but we can only produce 825,000 tons. If we consider also the export market, which is more than 1,000 tons, then it means we need to import more than 2,000 tons of crude oil. That also means if we don't even think about the export markets, in order to meet the domestic needs, we need to import 920,000 tons of crude oil. Coming back to the palm oil in Turkey, actually before 1974, palm oil was used just for non-food business, mostly soap manufacturing and oleochemistry. And first use as edible oil was in 1974 by Turya, which was a Henkel joint venture. And palm oil usage in Turkey last year was 775,000 tons comes from palm oil and fractions, and about 75,000 tons comes from palm kernel. Looking at the figures, total importation is about 870,000 tons. Palm and fractions is exportation is 165,000 tons, and exportation within the margarine is about 90,000 tons, which leaves almost 600,000 tons of usage in Turkey. And main part is used in the food industry, about 470,000 tons, and the rest is for non-food. If you look at the vegetable oil importation, palm oil comes to first actually, and it is the second biggest vegetable oil used in domestic markets. And it constitutes more than 30% of the total vegetable oils used in Turkey. If you want to make a palm oil importation comparisons, if you look at the July, these comparisons were made with the same month of the previous year. You can see that for the palm oils importation, it has increased about 120%. If we look at the January and July and compare it with the same time periods of the last year, there's a almost 6% increase in the palm oil. Looking at the palm kernel importations, again for July, comparison with the July 2020, there's about 6% increase, but looking at the same period of the last year, there's a loss of 12%. And just as a figure of the quantities imported from Malaysia and Indonesia, you see how it changed. Malaysia changed the rules of the game and increased its share tremendously in the coming years. Again, for the palm kernel, it is the same story, but you must have known it by heart. Looking at the constraints and threats for palm oil in Turkey, first of all, it's not preferred as a finished product by the consumers. It has been tried. There was a trial to put some palm oil on the shelves, but the consumers didn't like to close the look of it, or when they are using it or frying something, they didn't like the freeze version of the oil, because Turkish consumers are used to using sunflower oil, which is bright yellow, and they couldn't just love the product. And also there's technical issues, 3M, MCPD and GE issues. GE, yes, the companies can solve the problem here, but for the 3MCPD, as it comes from the source, and since there's an EU regulation now, which will impact also the Turkish regulations, we believe Malaysia will be solving this problem, being the leader of the palm oil producers. And there are also projections created by the media about palm oil. I will extend it a little bit. Therefore, there's a negative image of the palm oil in the eyes of the consumers. And there's also sustainable issues. Actually, it is more of an issue in the western part of Europe. In Turkey, it's not big for the time being, but that can be said that it's a serious future threat for the palm oil industry. Coming back to the palm oil image in Turkey, it has been very negative and misleading news on the media about palm oils. Some people who are calling themselves experts, they even said that palm oil equals trans fatty acids. We try to explain that is a really misleading thing, because we all know that it's actually anticore for the trans fatty acids, so that you can make trans-free products with use of palm oil. But the image in the minds of the consumers is like that, unfortunately. And although it's not allowed to use no palm images, there are some companies you can see using no palm oil indications. But also there are big opportunities of palm oil in Turkey. First of all, affordability is a very important thing. And no TFA expectations is also important. For the margarine industry, it has been more than 15 years, the margarines produced in Turkey has TFA limits less than 1%, not even 2%. But now the legislation is established, and now for the whole food industry, the products should have TFA levels lower than 2%. So this is also an opportunity for palm oil users. Palm oil is a very functional oil type, so this is very important as well. And it is very important for margarine industry. And in Turkey, margarine goes to 92% of the all households. So that's a big market. And also, Turkey is one of the major palm oil markets, attractive exportation destinations. So there's a great opportunity to be a hub. So maybe MPOC or MPOB will be thinking about creating a hub region for Turkey. And domestic consumption is increasing. As you know, Turkey has a free trade agreement with Malaysia. So the VAT is less than the ones that we use for Indonesia, for instance. So before I finish my presentation, I will talk about what MIMSAT is doing for communication, because this also includes some fight against misleading information for the palm oil as well. We have been making communication efforts since 2008 in order to prevent misleading information and to provide accurate and evidence-based scientific information for the consumers and the community. We are trying to use all kinds of communication partners. We talk with health professionals who has really negative impacts on palm oil, nutrition and food engineering students, academicians, medical doctors, and related NGOs and media. We aim to overcome wrong prejudgments and create better image for our categories, and explain the safety of the processed foods, packaging materials, and high quality of the products, and utilize from the potential, thus increase the consumption in Turkey. For that, we use integrated communication. As you see, sometimes we make advertising campaigns, we work with experts, we make PR, we have close communication issues with universities, ministries, and we also make digital communication. And I love palm oil and I love Malaysia. Those are the pictures from my previous visits there. As you can see, I'm so dedicated to palm oil. I even carried a palm branch of something about 25 kilograms, I think. And thank you for listening to me.
Ms. Bell, your mic is muted. It's still muted.
Okay, can you all hear me?
Yes.
Right, okay. Thank you, Ebru. You mentioned about the many challenges that Malaysian palm oil faces in the Turkish market. It's interesting you mentioned about the clouding of the oil, but this can be addressed through blending. And this is something that is being done in many markets where you can easily blend the oils either with local oils because it helps to improve the quality, the shelf life, the stability, and even the nutritional value of the oil. Certainly, that's something we should look at in promoting in the Turkish market. And you also mentioned about trans fat-free formulations. The world knows that palm oil is trans fat-free, and this is a competitive advantage that we have always been promoting. We know that so many countries all over the world are already phasing out trans fat in their food formulations because it's hazardous to health. And palm oil, due to its semi-solid nature, it does not need to be hydrogenated. So these are plus points I hope that you can help to convey to the consumers out there on the advantages of palm. But yes, I agree with you that more communication work needs to be done so that consumers are aware of the health and the nutritional aspects of palm oil. But also more importantly, you mentioned about the new sustainability issues that are creeping into the market. I wonder if we come in and aggressively promote Malaysian sustainable palm oil MSPO, or most of the companies here are even RSPO certified. Would that help in the greater promotion of Malaysian palm oil? We'll address these questions later during the Q&A session. With that, let me now go to our third speaker for today's session. He's Mr. Ahmed Alami. He is the Managing Director. Let me just get back to this. Mr. Ahmed Alami is the Managing Director of Alami Commodities Malaysia, and they have been involved in the sector for more than 30 years, and they are one of the major manufacturers and traders both in Malaysia and in Saudi Arabia. Mr. Alami will discuss on how Malaysian palm oil can be an economical solution for the Saudi Arabian food ingredients market. Mr. Alami, the floor is yours.
Thank you very much, Ms. Balvinder. Good afternoon and good morning to everybody. And very warm welcome to our panelists. Very interesting presentation. Very well done. All right. If you all can see my screen, my topic will be Malaysian palm oil as an economic solution for Saudi Arabia food ingredient market. We will look at the overview on Saudi Arabia, then we will look at their vegetable oil consumption and Malaysia's palm oil contribution, and then the challenges and opportunities faced by Malaysian palm oil, and finally we'll conclude our presentation. Saudi Arabia is located, as you can see, in the heart of the MENA region, which is a home for 700 over million people. And of course, the MENA region consists of the Middle East and Northern Africa, and it consists of 24 countries. Saudi Arabia is always said to be in the heart of the MENA region and the center of the world. This is very important to remember. The population of Saudi Arabia is 34 million as of 2019, and per capita consumption is 22 kilos per year per capita. These are very important facts to look at. The volume growth for oils and fats is 3 to 6% annually, and their total consumption of oil and fats in 2020 stood at 780,000 metric tons. Palm oil contributed to 68% of that volume, and 70% of which were imported from Malaysia, followed by sunflower oil with 16% share, and soybean oil with the 14% share. And soybean oil has taken more share this year or last year over other oils, such as it has gained share from sunflower oil, corn oil, and other oils due to the price difference. And corn oil has been losing more market share, and other oils and fats stood at 3 to 5%. Type. Consumption growth. Palm oil has been growing over the last 5 years due to positive macroeconomic condition and overall consumption growth, and mostly because of the increase in population and also changing consumer spending habits. Palm oil has also been growing to 5%. As we said, there was due to the rise in population as well as increase in the food manufacturing sector. Interestingly, the animal feed sector has been expanding, and last year it recorded 6% growth. And sunflower oil has lost some market share, as we have mentioned before, due to the price competitiveness, and other oils have swept in to gain more market share. Now, these are the growth drivers. We have mentioned population, changing consumer spending patterns. Most importantly to look at is expansion in the food industry in Saudi Arabia. In the last 2 years, Saudi Arabia has progressively and impressively have expanded in non-petroleum sector, and they have focused more on food sector. And we have seen a lot of entrepreneurs and also young entrepreneurs starting up food businesses, restaurants, and increase in fast food chains and so on. And this has stimulated the demand for palm oil. Also, we have seen expansion in the animal feed sector, which has been a major boost for vegetable oil consumption. And as you can see, as we have mentioned, the per capita consumption is 22 kilos compared to the world average of 18 kilos. We see that with this pattern that Saudi Arabia is moving towards 2025, per capita consumption will become 25 to 27 kilos per capita per year. These are the price fluctuation during 2020. In Q1, the prices declined because of the beginning of the pandemics and the lockdowns, and it bottomed out and it followed the crash of the crude oil. In Q2, started to pick up as the economies started to slowly recover. In Q3, major economies such as China and India started to open, along with the Middle East, and a lot of demand came in to replenish the reduced stocks, and that has pushed up the prices and reduced our stocks locally and also in Indonesia. In Q4, overall, the stock levels were very low at the producing countries, such as Malaysia, Indonesia, and also in Europe and US, and therefore it shot up the prices of all major oils, and it has been going up ever since. Now, Saudi Arabia's consumption is divided into 3 categories: retail, industry, and wholesale. In retail, basically is supermarkets and hypermarkets, and it takes up 30% of overall the market share. Mostly is vegetable oils and vegetable ghee, dairy ghee, butter, and margarine. The retail sizes start from 150 grams for butter and margarine, and for vegetable oils is 1 liter to 9 liters for cooking oils. As for vegetable ghee and dairy ghee, the sizes go between 500 to 5 grams. And these are examples of hypermarkets, major hypermarkets in Saudi Arabia. Now, the industry, it takes up to 30% of the overall consumption. Mostly it goes to food manufacturing industries, such as bakeries, confectioneries, flour mills, chips and noodle factories, dairy products, and other food ingredients, and processed food manufacturers. If you go to any supermarket in Saudi Arabia, you will find that more than 60% of the processed food items contain palm oil as an ingredient. And this is a very important element to remember, that palm oil has successfully, despite all the challenges, become an essential food ingredient for the food market in Saudi Arabia. For industry, mostly they take the oils in bulk or in drums or in 20 kg cartons and above. One of the biggest consumers are Unilever. They produce soaps and cosmetics. Pioneers, they produce raw material for animal feed. And Faqih is one of the biggest poultry farms that produces animal feed for chickens, which uses as well vegetable oils. The wholesale takes up the biggest share of the market, and mostly it's because of its wide range. You have consumers are mainly restaurants, fast food chains, and prep kitchens. They take up to 35% of the wholesale market share. Hotels and catering last year only took about 5%, mostly because of the lockdowns and reduction of pilgrims and tourism. So there wasn't much demand from hotels and catering. But this year we expect to see more demand coming in from hotels and catering businesses as the tourism or the travel ban has been lifted, and the pilgrims are coming back to Saudi Arabia. The packaging for the wholesale market goes by 17 and 18 liter sizes or 20-25 kg cartons. Examples of fast food chains are like Al Baik, which is quite famous, Harfi, and Al Tazij. These are the major players in Saudi Arabia, which consume 85% palm oil. Anvob, Pioneer, Savola, and Basatin, and IFCO. Anvob or Arab Malaysia, they are our partner company, and we have engaged them to produce our Malaysian palm oil products and sell it in Saudi Arabia and also into neighboring countries and in the MENA region and as well as in Europe. And it has been going on for the last 15 years, and we'll go more on that why later. Malaysia palm oil. As we have mentioned before, that Malaysia palm oil contributes to 70% of the total imports in 2020. And that's a significant increase compared to 2019, which stood at only 30%. That was mainly because of the changes in export policy, Indonesian export policy, so that the demand has shifted from Indonesia to Malaysia. So the demand for Malaysian palm oil is not consistent, but there are drivers that attracts people to buy Malaysian palm oil rather than other oils, from other destinations. Malaysia and Indonesia together, they contribute to 90%, and the balance comes from Egypt, Oman, and UAE. Now, the oil that comes from UAE and Oman are mostly sourced from either Malaysia or Indonesia, and they are packaged in their country and re-exported to Saudi Arabia, Eastern region, due to logistical reasons and advantages from the common tariff between the GCC countries. As I mentioned, Malaysian palm oil is preferred due to sustainability and quality. When I say sustainability, because of the recent, the negative perception on palm oil and ban on hydrogenated oils, more people are going towards RSPO oil and mass balance oils and MSPO oils as well, and that can be easily accessible from Malaysia. Now, these are the challenges faced by Malaysian palm oil. First was the Saudi ban on hydrogenated palm oil, which gave a negative perception on the oil, on the palm oil, or in general. People just assumed that palm oil is naturally hydrogenated and needs to go to a process to become unhydrogenated. And that took a lot of time and effort to change that perception. And due to its solid state, as our friend mentioned, that it's difficult to sell palm oil in supermarkets. Therefore, it also gave that perception that it's hydrogenated, that's why it's solidifying. So we result into blending. The blending ratios have been increasing due to the price differences between the vegetable oils. Therefore, there is more consumption or more, palm oil is taking more percentage of that market. We also mentioned there was a declining demand due to the travel restrictions from Hajj and Umrah. And also the raising freight cost is hugely impacting the export of Malaysian packed oils into Saudi Arabia and overall the whole world, but mainly Saudi Arabia. Why? Because there's a lot of oils coming from neighboring countries which are packed competitive oils such as sunflower oil, corn oil, soybean oil, and they are being more competitive than palm oil because of the logistical reasons, because of the high freight cost from Malaysia compared to other countries. For example, if we export palm oil in 1 liter bottle to Saudi Arabia, we have to pay $6,000 in container freight, whereby if we import 1 liter of sunflower oil from Turkey, it will cost like $1,500 in freight or even less. So relatively, it makes the sunflower oil cheaper to import rather than palm oil in finished goods. And this is why people resort to buying either domestically or import from neighboring countries. Also, another challenge is that Saudi Arabia increased the import duty from 5% to 12% for finished goods. And also they have imposed 15% VAT, which have increased the cost of goods in general. So people tend to buy oils locally rather than to import. And of course, the regional instability and tensions have restricted trade. As I mentioned, Saudi is a hub for the Middle East, and therefore it exports to countries like Yemen and Syria, Sudan, and Ethiopia. And when there's tensions in these countries, the exports decrease, and therefore the imports of palm oil to Saudi Arabia also decreases. With every challenge comes an opportunity. Now, the sharp rise in the seed oil prices have shifted demand from these oils to palm oil. We have seen this in consumers buying blended oils instead of buying soft oils. We have seen this in wholesale, in food manufacturers, also in restaurants, that they result to use more palm oil compared to other oils. And of course, price is not the only drive. Once they have used the oil and they see the efficiency of it and the economy of it, it created more awareness towards palm oil. So it was good. It played for our favor that the palm oil was relatively cheaper than other oils. Of course, and also the rapid growth in the food industry has increased the demand for palm oil as a more suitable solution for food preparation and also for, non-food product as well. And also exports through Saudi has become more attractive to neighboring countries due to the freight competitiveness. As we have mentioned, that Saudi is located in the heart of the MENA region, and export to these countries is easily accessible either by ships or by trucks. And therefore, Saudi Arabia is playing an excellent role as a hub for Malaysian palm oil. We have been doing that, especially in the past year when the freight costs have been tremendously increasing. We have used our Saudi partners as a hub to expand our products rather than to suffer the consequences of losing our customers due to the freight cost. Now, also Saudi have recently lifted the travel restrictions, and more tourists are coming in and more pilgrims are coming in, and that also will boost the demand for oils in the hotel industry and also for restaurants. And therefore, we have seen more demand for oils this year. And also the expansion of non-edible sectors. We have mentioned this before. Saudi Arabia is moving towards non-petroleum economy, and therefore they're expanding in all range of products, and cosmetics, animal feeds has been also on the rise. And last but not least, sustainability and awareness. Due to all these reasons and the shift to palm oil, and of course our campaigns and our continuous efforts to Ministry of Health and the Saudi Food and Drug Association, and also with the help of MPOC, we have created more awareness for people on palm oil, but of course more work to be made in the media, in advertising, and also in seminars to create more awareness. And a lot of people have been, major companies such as Unilever and Al Uthaim, they've been requesting for RSPO or MSPO certified palm oil. And that also is a good chance for Malaysia to step up and retain that market share or maintain that market share. To conclude, there are three main things to look at. I know my time is running out. Just let me head up. We have to look at the overall regional growth in the MENA region. MENA region, we mentioned before, and at the start of this presentation, that's a heart for 700 million people. And these 700 million people need to eat and need to cook. And the demand for oils, vegetable oils, have been rising. And our good friends, Mr. Faisal and Ibru, they have mentioned that the sufficiency of oil production in these countries are very low. Whether it's domestically produced or the seeds are imported, it still is not sufficient to curb their own consumption. Therefore, they will resort to import of vegetable oils. And also these countries, economies are expanding, and therefore the demand for palm oil will always be there, and it will always continue to increase. Malaysia have to find a way to maintain their position as a net exporter of Malaysian palm oil to these countries. Now, the overall consumption in the region is about 64%, but with more effort, we can reach to 75% in the next 5 years. Thank you very much. This is just a small presentation about our companies. Thank you for listening. If you need more information about palm oil or price trends, or you can follow us on Telegram. Thank you very much.
Thank you, Mr. Ahmed Alami. Again, a repeat of how attractive this region is by itself. 700 million consumers in the MENA region, not self-sufficient in their oils and fats requirement. They need to import a lot of oils, and palm oil has become an attractive source for them. But certainly, we also hear from the speakers the issue of sustainability. It's not really an issue, it's an advantage for Malaysia. We should promote aggressively MSPO oil, which is now largely produced. More than 90% of our plantations are certified, MSPO certified. So there are a lot of advantages to be taken for this RSPO certified oil. A lot of Malaysian players are already certified RSPO, but also a lot of communication efforts are needed to get the consumer to understand the better health, what can be provided in terms of the health qualities of palm oil. There's certainly a lack of understanding on the health attributes of palm, and this is a push that MPOC needs to do aggressively, probably to work with the industry players. We get to our last speaker, or not last, I would say our final speaker before we get into the Q&A. But for the information of our speakers, we have close to 400 participants that are listening into these webinars, and there are already 13 questions that have been posed. So you're going to be kept busy after this. And our final speaker is Muhammad Riyad. He's the General Manager of MTE Global Trading from Dubai, UAE. He has 17 years of experience in trading food commodities globally. And Mr. Muhammad Riyad will speak on the edible oil market in UAE. Mr. Riyad, the floor is yours. Thank you.
Thank you very much, first of all, for MPOC for inviting me for this presentation. I would like to share my screen here. Can you all see my presentation now?
Yes, we can.
Right. So good morning and good afternoon for people in different time zones. So today we'll speak about UAE as a gateway to the Middle East market. So my presentation outlines, I will speak first about the UAE in brief, and then I will give more idea about the edible oil in the UAE, and we'll end up with the conclusion. So we'll not talk much here. UAE is also a Middle East country, similar to Saudi Arabia, is in the heart of the world. The UAE population is 9.2 million, is smaller than Saudi, of course, but it's also located in a very strategic location in the Middle East and North Africa. So, of course, one of the very important port is Jabal Ali Port, which is one of the top 10 ports globally. So, in numbers, Terminal 1 in Jabal Ali can fit up to 9 million TEU yearly. So, it's considered, as I said, one of the top 10 ports that made UAE a very important hub for import, export, and re-export of many food and non-food items, actually. Now we'll move fast to the edible oil in the UAE. In fact, let me brief you a little bit about the customs and tax structure in the UAE market. There is a 5% duty for imported oil, which is refundable when we do re-export. And this is for trading, and there is no import duty for oil for food manufacturing. There is a VAT, value added tax, 5% when we do sales for domestic market. This will be 0% when we do export. The local production of the oil is mainly oilseed crushing for the rapeseed, oil refinery, repackaging and transforming to ghee, margarine, etc. The main players are Al Ghurair, IFCO, United Food, Advoc, and Moment Oil. So in terms of production, I'm sorry, I want to pause it a bit because this I don't know how to remove it anyway. So in terms of the production, in 2020, the most produced edible oil in UAE was the rapeseed oil, which contributed in about 99% of the total production. We can see from the chart here that the sunflower oil production is reduced in the recent few years. And there is a minor production of soybean oil, but the dominant oil produced in UAE is the rapeseed oil, which, as I said, is 99% of the total oil production. In terms of import, palm oil is the main imported oil, which is about 56% of the total imported oil. It is followed by the sunflower oil. As we can see from this chart, that the palm oil is the highest imported oil, and then followed by the sunflower oil. In total, UAE in 2020 has a total production and import of about 1 million plus metric ton. Rapeseed volume become more than palm oil since 2014. And we noticed that the average oil production and import for the past 10 years, it was around 960,000 metric ton all overall. We have seen a drop in the past 10 years, but it seems that the production and the import is recovering again. So this can give us some indication that the oil business in the country is, the volume is increasing again, as we can see from 2020 increase compared to 2019 and etc. So the thing here is we notice that the 73% of the total oils produced and the total oils imported to the UAE is exported. So it's mainly for re-export. As we can see, the big portion of the oil is for re-export. Of course, the rapeseed shared 58% of the total edible oil exported from UAE, followed by palm oil, which has 31%, and the last one is sunflower oil, only 4%. The per capita consumption in the UAE market in 2020 was 30 kilograms. As we can see, over the 1 million plus metric ton imported to the country, 73% is for re-export market, and later on we will speak in details about the re-export market in general. So I will speak here a little bit in details about the three major oils in the UAE, the rapeseed, the sunflower oil, and the palm oil. Rapeseed consumption increased 30% in the past 5 years. It's the main produced oil, edible oil in UAE. And the export has been increased 40% in the past 5 years. The main brands available in the local market are Noor for IFCO, and Lisior is imported from France. I'm talking here about the retail business. Moving to the sunflower oil, the local production of the sunflower oil decreased again the import. So we realized from the previous slide, as you have seen, that the import of the sunflower oil, it's offset the production. However, we can see that the sunflower oil consumption in the country increased in about 75% in the past 5 years. So it reached 117,000 metric ton in year 2020. The export is only increasing 7%, which leads us to understand that the local consumption for the sunflower oil is increasing compared to the export. And the main brands are Noor belong to IFCO, Afia is imported by Safola, and Lisior is imported from France. Coming to the palm oil, which is our main subject for today. In fact, there are two news. One is good, one is bad. The bad news is the long-term decrease in import of palm oil for the past 10 years could be due to the increased production of the rapeseed oil and the imported sunflower oil. And it could be also to the decreased re-export volume of palm oil out of UAE. However, the good news is that the MPOB record showed that 95,000 metric ton of Malaysian palm oil has been exported in the period between Jan 2021 to July 2021, the first half of this year, which is almost double than the volume which was exported for the same period of the past year. So this could be showing that the palm oil can do better during this year and maybe in the future. And the other good news also, what we can see, that the Malaysian palm oil in the recent years, in 2019 and 2020, has been increased in comparison to the Indonesian import of the palm oil. As we can see, in 2019, the Indonesian was 73% compared to 21% to Malaysia. In 2020, Indonesia reduced to 62% compared to the Malaysia, which became 32%. I will speak about the domestic retail B2C market. Actually, it's mainly controlled by the local producer and manufacturer or transformer. And it is containing three main types of palm oil products: the palm oil, the blended oil, and the vegetable ghee. In terms of the palm oil, we believe that the best seller or the highest market share is for Hayat, which is produced by IFCO in two different types, 1.8 liter and 3 liter cans. Then we move to the blended oil, which is, as my colleagues also highlighted, that it has a good opportunity. There is Sunny brand produced by IFCO in different retail packing. And the vegetable ghee, which is mainly produced by United Food under Asir brand and by IFCO under Hayat brand in small packing like 500 gram or 1 kilo, etc. So the retail in general, it is controlled by the local producer, local packer. However, the domestic HORECA or B2B market is not really controlled by the local, as we have seen in the previous slide. Here, there is more opportunity for imported goods to come. So we have also three main products are supplied. The palm oil, the most famous brand is a locally produced Mabruk in 17 liter tin. And of course, there are a lot of other imported brands. One of them is our brand. It's also packed in 17 liter tin and imported mainly from Malaysia. And as my previous colleague, Mr. Ahmed, say, a lot of transactions happening between the GCC country, from Oman to UAE, from Saudi to UAE, and so on. Also, the other way can be. It depends on the price, it depends on the position, to the logistic availability. So there will be some transaction and movement between all those countries. But we are focusing here on the Malaysian imported brands. Also, the vegetable ghee in 16 kilo tin, it's mainly produced in Malaysia or Indonesia to service the HORECA, the B2B business. And there is a small market for specialty fats. As in compare between the UAE and the Saudis, the food industry, the confectionery is not mature enough compared to Saudi. Most of the food items imported to UAE are from Saudi. So that's why the industrial market is more in Saudi compared to here, which is smaller than the other GCC countries. And of course, the main volume, as we saw in the previous slide, 73% of the oil is re-export. That's why the main palm oil which coming to the country is for re-export market. And in fact, the re-export market is divided between the local producers and the traders, because everyone has his own strangeness. Let's say for the local producer, the strange is in small packing, in a 3 liter, 6 times 3 liter jerry can. However, the re-export from Malaysia or Indonesia is mainly for the 20 liter jerry can. So the main re-exported product actually is always the jerry can, which is 20 liter jerry can as a main item, followed by the 3 liter jerry can, which could be produced locally, or there is a small percentage for the imported from Malaysia 3 liter jerry can. And later we will speak about this area in order to advise to focus on it by the Malaysian side. So the re-export business style here, it has three main models. First of all is a booking style. People like us as an agent or as a trader located here in UAE, we sometimes do booking directly with the manufacturer in Malaysia and ship directly to the final port of destination in the surrounding countries. Sometimes we ship to Jabal Ali, all under booking. The second model could be FOB Jabal Ali. We offer our customer goods available in Jabal Ali, but not custom cleared yet. So it's available in the free zone area in the port in Jabal Ali. And of course, the booking style is the highest volume because directly shipped from Malaysia to the destination. a huge quantity, and they can save a lot in the price. The second model is a medium volume, I can say, where we bring the product to Jabal Ali and then offered again from Jabal Ali. The last one is the local sourcing for re-export, where we already custom clear the product and we store it in our warehouses, and customer can buy here and do the re-export procedure. Of course, here they are not saving a lot, but they have flexibility to buy smaller quantity, half container or whatever available stock. So that's why the volume is not so big compared to the first two models. However, in general, the opportunity in the re-export market is here in the UAE. As we mentioned before, 73% of the oil imported is for re-export. The regular re-export markets, they are to Yemen, Aden Port or Mukalla Port, Somalia, Mogadishu Port, Berbera Port, Kismayo, Djibouti Port, it could be to Djibouti or to Ethiopia, final destination. We have also some occasional re-export market. To GCC market, occasionally we might receive order from Oman, Saudi, as my previous colleague, Mr. Ahmed said, when the price here is better than Saudi, you will see the Saudi people come here to buy. When the price here is better than Oman, maybe Omani people will come. And the other way also can be done. Certain time we can see the Omani oil coming here, the Saudi oil coming here, it depends. We have some other Middle Eastern countries, also it depends. Nowadays we are seeing a good business for the re-export to Middle Eastern country due to the freight trade. As you know, the container from Malaysia to, let's say, Mediterranean port, Beirut, it costs around $8,000 or $9,000. However, if we bring it to Jabal Ali, it will cost us around maybe $3,500 plus additional $3,000 or $4,000 to Beirut. It can be saving maybe $1,000, but not only about saving money, actually, about accurate time. When you know the availability of the vessel in Malaysia to Jabal Ali, it's on weekly basis and a lot of feeders coming. So we can plan our shipment easily. We bring it here and then we can rearrange the re-export procedure from here to the final destination, which allowed us to have more time management on the goods and to deliver to the final user in the destination country. Also, we have some occasional re-export business to Eastern Africa country. Coming to the end, the conclusion, first of all, as I mentioned, the UAE can allow us to give accurate shipment, less risk, convenient payment when buying from the UAE. Number one, UAE is an important business hub due to the large yearly number of visitors coming to the country here for business and non-business actually. The strategic location, the transit services, airlines, ports, the events held in UAE, Expo 2020, Gulf Food manufacturer coming on November. All those allowed big traffic in the country, which can be an opportunity for people to see, to buy, to know about the palm oil, and to have interest in to trade palm oil or import to their final destination. In fact, UAE is also a very friendly business setup and variety of business setup models among the 7 states, which attract many investors to set up branch offices here. That's why a lot of business talk happening here in the country, due to the many people or many big traders or companies, they have branches, they have offices here. So a lot of conclusion of business can be done from here, from Dubai. Jabal Ali Port, as I mentioned, is a very important port for transit, for shorter transit, and with many ports and converting vessels. Also, the Jabal Ali infrastructure and logistics is very good, as I mentioned before. The advanced banking system available here in UAE allowed faster payment, advanced banking solutions, facilities, and etc. For people who look at it, they will find it really here. Logistic infrastructure, warehousing, transportation is all available, and it's very, very, very well built and organized also. We have a very friendly re-export procedure, online export documentation from anywhere to anywhere. It's just a matter of one day. We can do everything, all the documentation. As far as we have the original document from the country of origin, we can reissue all the documents properly. And the municipality here is doing a very great job facilitating the re-export business. The other department in the government of Dubai and in UAE in general, they are really facilitating all the re-export to maintain the very good position for UAE as an export and re-export and a trading hub in the region and in the world actually. Then also the local and HORECA is growing, even though we have only 27% of the local consumption. However, the market is growing due to the tourism, the hotels. The HORECA in general is always growing. So local food industries, we have seen in the past 3-4 years, a lot of confectionery factories coming in the small, medium size to big size, a lot of sweet makers coming. So all of this will help for the B2B business and for the HORECA business, I believe.
Can I quickly ask you to please summarize the last conclusions? Thank you.
Okay, from buyer's point of view, it is convenient to pay actually in AAD to an UAE-based company. From also buyer's point of view, shorter transit time when buying from UAE, reducing the risk of huge price and the fluctuation. Also from agent and the trader's point of view, the location in UAE and the time zone, it's only 4 hours different between Malaysia and Indonesia. It gives good points for them and also closer to the final consumer in the destination. Now points to be considered, of course, the blended oil, soft oils, 70-30, or I'm not sure what is the exact percentage, but it should be considered. As we can see, there is a potential, especially for packed product. The trans fat free issue should be addressed. Actually, there is a misunderstanding here between the hydrogenation, the partially hydrogenation, and the trans fat issue. So those points should be addressed and explained better. Maybe G2G sector, just to know which product we should ban, which product we should not ban. Of course, there is a COVID-19 challenges because less visitors are coming, but now the travel ban are almost removed. The Expo 2020 is coming beginning of next month. So we are seeing a better movement and more visitors coming. Malaysian lockdown and the short supply and the huge increase in the freight rate from Far East compared to Eastern Europe allowed the replacement from soft oils. The small packing from Malaysia is not well accommodated, as we saw that mainly the 3-liter jerrycan is exported from here. So here there is an area to develop from the Malaysian manufacturer. RSPO demand is increasing, and we started our first sales of RSPO vegetable ghee in the market due to the re-export of sweet to Europe and other countries which require RSPO certified raw material. Kosher also become important after the agreement between UAE and Israel. So the kosher certified products are required for serving the HORECA business and the manufacturer. So at the end, our company is also will be glad to serve any Malaysian oil manufacturer who is interested to develop or to know more information about the market. So please feel free to contact me anytime. Thank you very much for your listening.
Thank you, Muhammad Raid. Just for your information, there has been interest from some of the participants to start collaborating with your company. So probably there is already a business potential coming your way. For the information of all the participants, there has been a number of requests for the presentations made by the speakers, and these presentations will be available on the MPOC website by this evening. You should be able to download them. Now let's go to the questions. I have here about 20 questions, and we only have maybe 17 minutes. Let's see how many we can take. Question to the panelists: what makes sunflower oil popular in the region, and are there any regulations such as on 3-MCPD and low GE that will come into the region? Can I ask any one of the 3 panelists, the one from Turkey, UAE and Saudi, if you'd like to answer these questions?
I can start if
Please do.
other persons don't mind. Thanks for the question. For the sunflower oil, well, it has been a domestic production for the sunflower, so we used to be consuming that, so it's kind of popular and also cheaper than the other vegetable oils. So Turkish consumers are used to it, therefore it's more popular. The palm oil comes from importation, it's not well known, well understood. So there's the gap of understanding in between those vegetable oils. Regarding 3-MCPD and GE for Turkey, yes, it's coming soon. For GE, it was already being discussed in the regulations, but the regulatory bodies wanted to wait for the 3-MCPD, and now it's also published in Europe. So the same legal requirements will be approved and used in Turkey in the coming years, I can say.
Any of the other panelists would like to add on to this?
It's very important to look at the region. For example, the Middle East is located nearby Europe, where most of the sunflower oil is made. So most of these oils are marketed to this region, and it has been doing so for the past decades. So, and that's one thing. The other thing is what makes it famous is that the packaging in retail, the color of it, the smell, the taste compared to other oils. Palm oil is mostly used in industry, therefore it's not known by the common man. They know it maybe as a vegetable oil, or they don't understand. Even sometimes when you hear palm oil, immediately their mind goes to the palm tree in the Middle East. They say, I didn't know that this palm fruit can produce oil. So we have to explain, no, it's from a different fruit and so on. So there's a lot of like awareness, as I mentioned, needs to be done. And even blended oils with palm oil, with sunflower oils, they don't know that the blend is palm oil. They just see it as sunflower oil. So the region plays a big role. And regarding the 3-MCPD and low GE, no, there is no regulation towards this, only towards trans fats. That's it for now. They are aware about the Nutella campaign and issues and all that, but nothing so far has been implemented towards that.
Okay. Raid, do you want to add anything, Muhammad Raid?
Well, from my point of view, I can tell you two main factors for the sunflower oil to be famous, beside the regional distribution of the sunflower oil and the retail view of the sunflower oil, the clean. There is one thing, is the margin behind sunflower oil, and this is very important point to say. Many traders, many manufacturers here, they stop repacking palm oil because of the low margin, and they shift to pack the sunflower oil because there is more area to be achieved in the sunflower oil, and we need to take this into consideration. The margin plays sometimes major factor into introducing certain types of oil. To me also, another thing, being as a HORECA seller, the mayonnaise and the food manufacturing here is mainly rely on soft oils, you see. So we cannot ignore that certain application for the sunflower oil and soft oil, it is more than the palm oil. Let's say the salad dressing, all this, it cannot be done by the palm oil. So the application itself also keep the sunflower oil maintaining a good position.
There is a question here on what is the growth seen or growth sector seen in the specialty fats sector. Oh, sorry, if I may put it back again, what growth do you see in the specialty fat sector? Any one of our speakers, please?
If I come back to my presentation, I would say that I don't have an exact number to say a percentage, 1, 2%, 3%. Maybe Mr. Ahmed, he mentioned already in his presentation the exact growth percentage in Saudi. But here in UAE, I can say yes, there will be a growth into the importation of specialty fats because of the growth into confectionery industry happening here, and the incentive coming and given by the government to the manufacturing and the Made in UAE campaign. So this, it might increase the import of specialty fat. I can answer this question maybe next year after I will have more view on the confectionery market, and I will see what happened, what growth we achieve in 2029. This is exceptional year, you know, is a COVID year, so we cannot really measure anything. But Mr. Ahmed, he mentioned about the growth in Saudi, which is maybe more obvious.
Yes, thank you, Raed. Basically, the ban on hydrogenated oils and fats, it actually gave a big room for palm oil to step in as a replacement or a solution for or an alternative for these hydrogenated oils. We have developed specialty fats which are from palm kernel oil, and whether it's palm kernel oil or palm oil based or a mix of both, without the requirement of hydrogenation, and a lot of companies have done so as well. And they have proven to be a suitable solution or replacement for the hydrogenated fats. So the room for growth for these products is much bigger now compared to before the ban on hydrogenated fats, actually, because now there's no more room for hydrogenated soybean oil or rapeseed oil and soft oils. So people are shifting towards palm oil, and if you can see on the ingredients in the supermarket on the biscuits or the cakes, it's mentioned there vegetable oil, non-hydrogenated, and then in brackets palm. So palm has become a replacement for hydrogenated fats. And as I said, Saudi is expanding in the food sector heavily, and it has done, and it produces all the major chocolate brands and cakes and biscuits, and therefore and re-exports to neighboring countries and also selling locally. So the room for expansion is quite huge, yani. So and it's open for business.
Okay.
Well, I would like
I've got a question. Okay, yes, you may add.
Before that as well, like, you know, actually palm kernel oil is definitely, I think, one item which is benefiting from the increase in the consumption of shortenings and fats. Only in 2019, you know, the export is from Malaysia only is nearly 175,000 tons of palm kernel oil only, which is very significant. This year has gone down a bit, 2020, for obvious reasons. But like Emma just said, that the ban on sat fat was actually, it might have played a little role in, you know, in people misconceiving palm as saturated or hydrogenated fat. But I think palm is benefiting from this ban on sat fat.
Yeah.
Trans fat.
Okay. Faisal, there is a question. Sorry, Ebru, do you want to add on to that before I move on to the next question? Yes, please.
Yes, but just a small part.
Yes, please.
I also see a growth opportunity for palm oil in Turkey. First of all, the margarine industry is getting bigger. And when I say margarine, I have to underline something. I said 40% of vegetable consumption comes from margarine, but when I say margarine, majority of it B2B. And for B2B, we use palm oil a lot. And also for the specialty fats, it's gaining more and more importance. And there's a big opportunity for palm oil to get more role in Turkey, I think.
Okay. There is a question here why Egypt was not listed in our presentation. Faisal, how much palm oil consumption is there in Egypt? Is it significant? I'd like you to take that.
Yes, it is significant. Egypt is a 1 million ton market overall for palm oil. Malaysia, Indonesia share that market. Indonesia has a higher share. Actually, Egypt was not included because, you know, we consider that in the Northern African region. There'll be a special, actually dedicated seminar for the Northern African market pretty soon. We'll send a notification to all our members. So that's going to feature on Morocco, Egypt, and a couple of other Northern African markets.
So everyone can look forward to another webinar. But to the next question I have here to the panelists, is there any import tax imposed on palm products in Oman or UAE?
No, it's similar actually. There is, of course, is 5%, but similar to any other oil. As I mentioned in my slides, when you import for trading, you will pay the 5%. But if you are a food manufacturer, you import for processing, you will be exempted. You will under some schemes, you will be exempted and you will be zero. You will pay zero. But anyway, for re-export, you will get back whatever you paid as a tax or VAT or so on. Any tax or custom, you will get it back.
Another question that we have, are MENA importers facing issues with the shortage of palm oil from Malaysia and Indonesia in the current climate? Is that happening in your region?
Say again the question, sorry.
Are any of the importers facing issues with the shortage of palm oil from Malaysia and Indonesia in the current climate?
I can't say for Saudi that we are facing shortage, no.
Okay.
Maybe Mr. Faisal can tell us more about from his research.
Let me answer you from the ground. Okay, maybe I can understand the question a little bit what they mean. In the past 3 weeks or 1 month, yes, we have in the ground a shortage. But what happened? Not shortage for the local supply olein. You see, because here we have the re-export market and we have the local consumption. The re-export is 73%. The local is only 27%. The local was not having any shortage. For 17-liter tins, our company has all the competitors. We have stock here and we have good stock, can be enough also for the next 6 months. But we had a shortage for the re-export 20-liter jerry can Yes, and this one, it was due to a huge increase in the CPO price. Many people, they hold their position. They did not take position. A little bit delay from the shipping lines to deliver the container to Jabal Ali. We had a shortage of around maybe 10 days. Then after that, now we have a plenty of palm oil. If you want now, our price here is cheaper than Malaysia. We can sell to you 20 liter or 70 liter, very cheap price. A lot of oil is available in Jabal Ali at the moment.
That's interesting. There is a question from one of the participants. It's about the Turkish market, where it said they have less preference for palm oil compared to sunflower oil. So what about the taste preference for sunflower and palm oil blended? We spoke about blending of the oils. So would that cause a problem in terms of the blending that's done between palm and sunflower oil? Ebru, would you want to take that question?
Sure, with pleasure. Thanks for the question. Actually, the problem is not about the taste. And as we all know, if it's fully deodorized, then the taste will be natural anyway. So it's not about the taste, but it has been tried by the MPOB and the industry more than 10 years ago to use palm oil as a finished product for the consumers. But as I explained in my presentation, the consumers was not used to it and they refused it. So it's about the customs. I mean, the way they want to see the palm the oil in the consumer side. So that's why it didn't work out. But also for frying reasons, for instance, some blends are being used, and so for specialist fats, yes, there are many blends that are being used.
Yeah, it's about the consumer perception. We do face that in many markets where people perceive the clouding as not of good quality, which is wrong. We always tell people it's like putting ice into, putting water into a refrigerator and you get ice. It's the same with palm. It's liquid at a normal temperature. So there's no taste and there's no smell. It actually helps to enhance the quality and the nutritional aspects of the oil. It also helps with the shelf life. But again, it's a matter of educating the consumers on this. So a lot more efforts need to go in to education of consumers in the Middle East market. This is important. We have a question here on Malaysia's presence at the Middle East, the Expo Dubai. And I don't have details, but yes, we are participating under the Malaysian Pavilion. And we will be there for 6 months promoting the various commodities from Malaysia. I'm sure you will be getting more information at the MPOC website soon. Again, there's a question on the announcement of by Malaysia to open up an office in Saudi Arabia. Yes, we have just opened an office in Jeddah, and we should be doing the official opening soon. You will be hearing about it. That would probably be in the next few months. It will be formally established, and it's just not an MPOC office, but it's a joint office between rubber, timber, and palm oil. So there's going to be a lot of joint promotions being done to promote commodities coming from Malaysia. But this is a question that we have from the same participant. You mentioned that palm oil already has a 64% market share in the next 5 years to increase to 75%. In what way will the office help to accelerate the increased uptake of palm oil in this region? And you mentioned that attractiveness of Malaysian palm oil is due to its price competitiveness. Will the future demand for palm oil, is it in crude or in processed form? We'll leave the office aside, but let's take the question on the price and the demand for palm oil. Is it in crude or in processed form? Panelists, please. We don't have much time and we'll have to wrap up the session soon.
Of course, when we were talking about palm oil competitiveness, we were talking about palm oil competitiveness to other oils. Whether it's in crude or processed forms, it makes no difference. The difference is, like I mentioned, there's a duty on finished goods and there's less duty on raw materials. So of course, the demand is for the raw material, not for the finished goods. I don't know if that answers his question.
Anyone else wants to add to that? Okay, nothing else. With that, I would just like to say thank you to our speakers. I think it was a very enlightening and educational webinar that we've had. We certainly hope that all of you that have joined us today, we had close to 400 participants. You have gained some valuable insights of the market, which could help your companies to expand your business here in future. But I just want to also inform that we would like to invite you to join us in another webinar focusing on digitalization of the palm oil sector here in Malaysia to increase efficiency of its operations. That will be next week, Tuesday. So we've got 1 minute, and for the last 1 minute, I'd just like to ask quickly for all the panelists to quickly wrap up your presentation. You've got less than a minute here. Last few words before we close the session, please.
No, thank you, Ms. Bell. Actually, we could have gone on for another half an hour. The amount of questions were coming in, but it's just that, we have, with these partners that we have identified, all of our friends from industry, after listening to these presentations, I find even more motivated and determined to enhance our participation and cooperation, especially with our partners in Turkey, UAE, and Saudi. And hopefully, I look forward to working with all of you in coming months and years.
Ebru, can we have you say something?
Yeah, just a small few words. As we see, there's a big potential in the region, but there are two main issues for Malaysia to work on. I think one of them is technical issues, 3MC PD. Without increasing the price, they have to create a solution for that so that we can buy more of the palm oil from Malaysia. And the second one is, I believe, to be a proactive in communication. So it's not the time for defending, it's time for proactive communication. That's the whole word. Thank you.
Ahmed, anything would you like to add?
Yes, thank you, Ms. Balwinder. There's three things Malaysia needs to look at very, very closely, very importantly. Malaysia needs to firm their grounds in the Middle East and not depend on Indonesia's tax policy in order to gain market share. They need to find ways to maintain this market share and grow it. And that's very important. The second thing, they need to create a lot of awareness on palm oil and its benefit and its nutrition. And that will take heavy campaigns, especially in social media and overall media, and also lobbying in associations and health associations and so on. The third thing is for Malaysian exporters. Now you are faced with a challenge, which is freight. The long-term solution is for Malaysia to have its own fleet, or Asia in general. Maybe they can join hands and create their own fleet to solve this nightmare. But now you are faced with a problem. And our friends here have also, they have provided some solutions which they can help with that. And we also offer that solution, and by partnering with our Saudi company in Saudi Arabia, and re-export and use it as a hub to re-export to other destinations. So my just advice to everybody to find a solution and don't wait for the solution to come to you. Thank you very much.
Right, would you like to add something here?
Well, I would like to say that here is really a hub for the re-export. As we mentioned, 73% of the oil is re-exported. So any Malaysian company is most welcome to come to understand the ground of the re-export. Most of the oil coming re-exported from here to Africa to other destinations. So you can have a very good insight from here to understand where is the final product goes. And also one important thing we are seeing recently is the flexibility from Indonesian manufacturer, which has really made us focusing on that area, because they are more flexible, they are more willing to do business with the region. So they accept to do many things. Doesn't implement any barriers compared to the Malaysian suppliers. And this is very important thing. We realize that the palm oil manufacturer become in a very mature stage where they don't want really think in win-win situation with the importer here. So we just firm the rules and take it or leave it. But when we come to the Indonesian alternative, we can see very too much flexibility and willing to do business. So maybe this one is also sometimes winning a market share.
Thank you, everyone, to our speakers. We are indeed very grateful from MPOC for the time you have taken to be with us and the effort you have taken for your presentation. And to all our participants, thank you again. And we look forward to seeing you, probably joining us for another webinar session next week. Good day and bye.
Thank you.
Thank you.
Thank you. Bye.
Thank you, everybody. Bye-bye.
Thank you all speakers. Thank you all attendees. Thank you. Bye.